What is going on YouTube? It's Sankey and I make videos on the stock market. As always, I've got a jam-packed one for you today. But before I get cracking, if you don't already have a Trading 212 account, open one using my link down below and you'll get a free share of stock. Firstly, I'd like to say a big happy new year to all of you out there, and I'm very excited to kick this year off and share the journey with you guys, because there's a lot of opportunity out there in the stock market and we are going to make sure we capture them and dominate all throughout the year. So we're going to kick things off by talking about Alpine Technologies. Now, this is one of our home run plays over here on this channel. A lot of us have made a lot of money in Alpine 4, and the good news is going through 2021, there's still a lot more room for growth in this company. So if you don't know Alpine Technologies, they're an investment company. They go out and acquire different businesses and vertically integrate them. Right now, they're predominantly focused on the UAV sector, right? The unmanned aerial vehicles. Those are the drones. Now, this is an explosive sector, so that's why I say there's a lot more room for growth in Alpine 4. So if you guys have been following Alpine 4 over the last 24 hours, you know that stock price has been very volatile. But as I've said to you guys before, when the stock price moves like that, you can maximize the return on your investment by taking advantage of that opportunity. Now, I've had a lot of messages from you guys saying, should you sell out of Alpine 4? What's going on? But here I'm going to give you guys a strategy and explain what's happened over the last 24 hours so you guys know exactly what to do with this play going forward. So let's jump into the share price graph. Up on screen, I've got the Alpine Technologies share price graph over the last 24 hours. And as you can see on the highlight inside this yellow triangle, we started off the day with a huge drop in that share price, right? I'm talking almost 30% drop in that share price, and the stock fell to below $3. Guys, it was at this point in time that I notified all the patrons. I said, I am buying Alpine Technology stock. I think this is going to rebound strong. And a bunch of us jumped into the stock at the dip. And what happened afterwards? We had a very strong rebound, right? That investor sentiment behind the stock is extremely strong, pushing it up to above $3, and then finished the day just over $3, around $3.64, and only 3% down, right? Considering the drop was almost 30%, so it's a strong rebound in the day. Now, guys, how did I know that Alpine Technologies was going to rebound? I said to you, this stock can drop 15 to 20% at any given time. And if I just go back, the same thing happened a couple of days ago, and we can see a similar strong rebound in that price, right? The investors are bringing that share price back to life. So I had a good feeling that was going to happen again when the stock dropped like that yesterday. Now, I'd love to notify everybody on the YouTube channel, but just given the time it takes to edit and upload, I wasn't able to do that in time. And by buying that dip, what we've done is we've made 25% return on our money in the day. That's why I say to you guys, buying the dips is a golden opportunity to maximize the return on your investment. Now, the reason why the stock dropped off like that is not because there's any bad news or anything wrong with Alpine 4. It was just simply a profit taking. Now, you've got to understand this stock has run up significantly over the last couple of days. And as a result, you're going to get profit takers, right? But long term still has fantastic future potential. Now, I do see the rebound that Alpine Technology stock had after dropping negative 20% in the day as a very strong signal of positive things to come. The stock only fell 3% in the day. After intraday, it was down almost 30%. So this sheer investor belief, this confidence in Alpine Technology stock, the understanding of their future potential, tells me that they have a very good 2021 coming and beyond, right? Otherwise, that stock price would have dropped 20-30% on the day and stayed down there. It wouldn't have come back that strong if there wasn't good things on the horizon. Now, in terms of where do I see Alpine 4 going from here, I do still see volatility in the stock of anywhere between 15 and 20%, right? But you can use this to your advantage by buying the dips and maximizing the return on your investment, right? But long term, going through 2021, I do see the stock price on the rise. Now, a lot of things are playing in their favor. The first is, you've got to remember, they're an acquisition company, and they have said that they are looking to acquire support subsidiaries early 2021 to support both Impossible Aerospace, their first drone company, and Gevo, their second drone company. And when they do announce these support acquisitions, that share price could potentially rise. Another catalyst is the uplisting to the NASDAQ. We know that is on the cards for the end of this month, early next month. Also, there are more relaxed regulations coming into play in the UAV space, right? I put on your radar that they are now increasing safety measures, and the two regulations was, one, all the drones have to have remote ID, and the second, they're allowing drones to fly over humans at night. Now they're going to start introducing more and more of these relaxed regulations, which is only going to help Alpine 4 in the long run. Now, given the short-term volatility that might play out in the Alpine 4 technology share price of around 15 to 20%, it's wise to wait for an entry point below $3. So if you can catch this stock under $3, consider loading up, get your position ready, because I do see this stock hitting at least $5 by the end of 2021. So that's a fantastic return if you can get in under $3. And I look forward to celebrating with you guys when it does. Up next, we have Gevo. Now again, Gevo is another one of our home run plays over here on this channel. Gevo produce sustainable fuel, particularly to the aviation sector. And they still have room to run up in 2021 because they're going to play off very nicely in the boom in green energy that we are going to see now. Quickly jump into the share price graph. Let me show you guys a few things. Gevo have had a fantastic run up in their share price, right? As you can see. And recently they've had a bit of volatility, downwards pressure in that share price, but they look to be on the rebound, right? Onwards and upwards, right? Now, the reason why we've seen a few down days in Gevo is because they've come out and said that they are doing a stock offering of $150 million. Now, we've seen a lot of stock offerings this year. We've seen Tesla, we've seen NIO. We know what it does to their share prices. It does make the share price drop in the short term, right? Because it does have a dilutive effect. But as I've said to you guys before, this is a win-win situation, because in the short term, you can buy the dip, and in the long term, they're going to use that proceeds to grow their business, right? So you're ultimately investing in a better, bigger, and more powerful company. So Gevo, for you guys to know, are now a very cash-rich company. Not only do they have just under 70 million in net cash, they're also now going to have the 150 million in proceeds after the offering, right? Now, Gevo burn through about 23 million of cash each year, and this gives them a very nice runway to about 2030. So you're investing in a company that now is sitting on a pile of cash to grow their business, right? To invest in their plants where they're going to produce that sustainable aviation fuel, and going into 2020, through 2021 and beyond. This should be a very good investment that you're sitting on. So I do like Gevo. I'm very positive about their future potential. So I also want to put on your radar that Gevo has received an increase in their price target from an analyst from Noble Capital to $5, right? So this gives you upside of just under 20% on the current share price. Now they've come out and given an outperform rating. So I just wanted to explain to you guys what that means. So we have buy rating, outperform, hold, underperform, and sell, guys. So this is tier 2. Tier 1 is a buy rating, so that's when the analyst is very confident that you should go out and buy that stock. Tier 2 is an outperform. This means that Gevo is expected to beat the overall market, right? So this is looking like a good investment going through 2021 and beyond. So in terms of an entry point for Gevo, if you're considering adding to your position, or if you're a first time buyer, do consider getting in under $4.10, because I do see the stock going all the way up to $5.50 by the end of next year, which should give you some good upside on that stock price. Now, they have a lot of things playing in their favor. Have to remember that they recently have come out and announced that they have the option to purchase a site which is going to enable them to fulfill a $1.5 billion contract with a leading commodities trading company, right? This is absolutely huge. And also have to bear in mind, when the aviation sector rebounds, Gevo are going to be well positioned to take advantage of that. So I do see this as a fantastic short-term and long-term play as we go through 2021 and beyond. So if you've been rocking with the channel, you know what time of the day it is. It's question of the day time. This question comes from Ben. The question is, I'm a student. Ideally, how many shares in a company would you recommend having to make a decent return? I hear a lot about diversity. I've trimmed down my portfolio. It once was 25, now it is 10. So thank you very much for sending this in. Guys, if you have any questions or comments, leave them down below for me. Firstly, I want to give you a big shout out for getting into investing when you're a student, right? Because this is one of the best things you can do. The earlier you start investing, the better. Because what happens is your returns, your investments, they compound over time, and you'll make more and more money, and it just snowballs, right? So in 10 years time, you'll be sitting on a mountain of cash in your portfolio. So it's so good to see so many new investors tuned in to the channel, right? There's really two questions in here, and I'm going to tackle both of them for you. The first is, how many shares do you need to make a decent return? So it's not always necessarily about the number of shares you have in a particular play, because all stocks carry different prices. For example, Apple is sitting about $130, whereas Alpine 4 is around $3 or $4. So if you have 100 shares in each of these plays, they're going to do drastically different things to your portfolio. So what I do is, what I try and aim for is that each play has around at least 2 or 3% in my portfolio. Therefore, when that share price runs up, it has a meaningful impact on the portfolio, right? So for example, if my portfolio is sitting at $10,000, then I'm going to have at least $200 or $300 in the play minimum, right? That's what I shoot for. The next thing then you want to be thinking about is you want to be investing in high growth plays, right? So I always think I want to beat the S&P 500 each and every year, which is going to give me about 10%. So I'm looking at plays that are going to return me at least 20%. If I'm not going to get at least 20%, I'm not interested and I'm not going to invest in them. Now, we're fortunate enough to live in times where a lot of sectors are blowing up for us. EV, UAVs, renewable energy, just to name a few. And a lot of the plays that I've given you guys have blown up 100%, right? In a week, 2 weeks time. So we are very fortunate to live in these times. And you guys just follow the blueprint, invest in the plays that I give you, and you have fantastic success in your portfolios. The next question was regarding diversity. So I would recommend having at least 30 companies in your portfolio. Otherwise, what you're doing is you're having a little bit too much risk by relying on only 10 or 15 companies, right? Having that diversity gives you that risk protection, but also it means you're not missing out on some plays that are going to give you some fantastic returns. There's a lot of money to be made out there in the stock market, and you don't want to leave any of them uncovered, right? You want to be investing in all these high growth assets in all the high growth industries. That's why I come on here each and every day to give you guys plays, high growth plays to invest in, take your portfolios to the next level. So that brings us to the end of the video. Please hit a like, it really helps the channel out. If you're new, do go ahead and hit that subscribe button for me, become part of Stockflix. And as I always say to you guys, do check into the channel regularly. The stock market is rapidly moving and you never want to miss a beat. So I'll catch you guys in the next one.